Hey guys, Trade Under 10 here. I tried to do this video last night, and I guess there was no sound, so I'm going to do it again today. And the thing that I kind of came up to a realization yesterday after talking with a friend of mine about a breakout, and the breakout that we were talking about was Earthlink, ELNK, on the weekly. He told me that there was a breakout. Look for the breakout of 561 on the weekly or 562 on the weekly. And ELNK should be breaking out into even further. And when I pulled up the chart, this is the weekly chart of ELNK. I didn't see that. I saw 528, and I was confused. And I was like, "Hey man, what's up? Like this isn't what Am I seeing something different, or am I missing something?" And that's when he showed me his chart. And I have two charts right here. This is the chart he sent me. You can see pretty clearly from that red circle that ELNK has hit 562 back at the start of 2014, and that's kind of where that price rebounded off as a level of resistance. This was actually yesterday, and fell back. And if I pulled up another chart, I looked on. This is from Google or Yahoo Finance, I should say, and you can kind of see the same thing. 562 is actually the level of resistance back in. This is if you look right where this spike is just after November 2013, there was a little spike that's right at the start of the year, and that's the 562 break that he was talking about. And I was confused, and I was like, what the hell? I actually thought there was something wrong with the stock charts data. Did some digging into it, and what I realized is that there's a difference between adjusted and unadjusted charts. And what I mean by adjusted and unadjusted charts, what we're going to do is just watch this video, the first few minutes of this video right here. And I think this guy explains it better than I do. So,
hello and welcome to this mailbag video from stockcharts.com. Today a user writes in asking what's the difference between adjusted and unadjusted data. And we're going to show two charts to show you just how much dividends can affect the total return. All right, so note that by default, stock and ETF symbols show adjusted data at stockcharts.com. And this means the data has been adjusted for dividends, stock splits, and other financial events that affected the stock price. So when a stock goes ex-dividend, on that day, they subtract the amount of the dividend from the stock price on the open. And because that was paid to the shareholder, StockCharts puts it back into the price. And that way you can get an idea of what the total return is for your stock or ETF.
So that's kind of like a nice little explanation of what, an actual adjusted and unadjusted data. I hope that made sense. So basically, to recap, when a stock pays out a dividend, that the price of that dividend that's paid out gets subtracted from the price of the stock because it gets paid out to the shareholders. And it affects the total return of the stock you're trading. And a nice thing on stockcharts.com is you go down to overlays, you can put in events, and you can see that right around, I think it's the 4th of December, the ELNK Earthlink paid out a dividend, and that price was subtracted, on this chart, that price was subtracted from the price of the stock. Now, one thing I want you to look at is on stock charts, if you put an underscore in front of the actual ticker, you can see that now the difference in price. If we go back, it's got 508, 528, and now this is 546, 562. So the stock is essentially, you're looking at almost, a 30 some odd cent difference between the two prices, just under 30 cents. And that should accurately reflect, the dividend that Earthlinks pays is about 20 cents a share. So that, roughly equates to the difference in, price. So what some of you might be looking at, and I guess this is my point from this video, is that you need to be very aware of what you're looking at, the data you're looking at on your charts, whether you're looking at adjusted or unadjusted data. Now, my friend was looking at, this is Thinkorswim, this is his platform, and it's pretty clear that he's looking at unadjusted data. Same with Yahoo Finance. They don't adjust their data for stock splits, for dividends, you know, and it affects your total return. If you go down here, I put in this is the price performance of ELNK unadjusted. You can see you've only made a negative 16, almost 17% return. Where if you go back to the adjusted data, it's only a negative 8 return. That's almost half the difference. And so it does affect your actual total return that you have in your stock, and it will affect what price or what level you set your breakouts, what level you'll set your support and resistance, and so on. Like if you took, if yesterday when I was looking at this chart, actually ELNK, where did it close at? This is a screenshot from yesterday. It closed at, close to 539. So on this chart, it had already broken out. And I was like, well, it's a moot point right now. The stock's going to continue to go up, maybe hit resistance at 626 on the weekly. But on this chart, at 539, now this looks like an attractive breakout prospect. And I kind of pulled up two other charting systems, which I know some of you guys use. This is FinViz. And if you notice, they have, I can't tell because I don't have FinViz Pro or Elite, I should say. I can't tell what this price is, but I believe yesterday when I made this video, the stock had already broken above this price. So I'm pretty sure that this was actually adjusted for dividends, but I'm not sure. I'm not, because I can't actually figure out what this price was back in the start of February. Or start of 2014, I should say. On TradingView, if you bring up TradingView, I can see that, and you notice that they don't adjust their price for dividends. You can see even down below here, the dividend was paid out, and they don't reflect that into their actual. They don't reflect that in their actual price. So I guess stock charts would be adjusted, because otherwise this candlestick would be above. They do adjust for dividends, because otherwise this wick would be above 550. My point being is that make sure you look at what you're looking. Actually look if you're looking at adjusted or unadjusted data. It's important, and it will affect your levels of support and resistance that you place on a chart. Now, does it matter? I mean, yesterday, if you looked at this and someone was using the weekly chart and the price bumped up, it looks like pretty clearly that the price bumped off resistance at 562 and came back down again. So, does it matter? I'm not sure. If a lot of people are looking at unadjusted data, then, it might just be a self-fulfilling prophecy and everything's going to be okay. And I think that staying consistent with whatever you've been using is worthwhile. I just want you to be aware that some charting services, stock charts in particular, uses adjusted data as opposed to unadjusted data, which you might see in TradingView or Thinkorswim or Yahoo Finance. So that's kind of like the point of my video. Just be aware of what you're looking at, because it will actually affect levels of support and resistance that you place, and it might, you might miss out on a breakout. You might think a breakout hasn't happened yet. So it's just something to be aware of and take note of. So I hope that helps. It's something that I learned yesterday for the first time, and I know for some people who are new to this, they might not know that might not know that this kind of thing exists. I suggest you actually go back. I posted this link on my website, and I think it's useful just to watch this 4-minute video and kind of read his little blurb on it to get a more in-depth knowledge of what unadjusted and adjusted data is. So I hope that helps.